Hello, YouTube. I'm very excited to be here. This is my first YouTube video, and over the next many months and years, my goal is going to be to create a lot of value geared towards investing education, and you guys will derive a lot of knowledge from it. So if you find the YouTube channel like insightful, by all means subscribe. That will be a big deal for me. It will help us a lot. But just to take a step back and just introduce myself. So I am a full-time business owner and investor. The company that I own is called like a Tortoise, and that already tells you a lot about my investing approach. I like to buy great companies led by outstanding managers trading at lower valuations, which is not easy to find if you are considering overvalued markets, for example, the United States. And this is probably what distinguishes me from competitors across YouTube, is that many of them like to buy quality companies, but they buy them at what they call fair valuations, which is fine. But to me, their fair means expensive. Hopefully, I like to buy them at lower prices. And for that to happen, a company-specific event or a broader market event like a recession needs to happen to bring those prices lower, regardless of how great the company is. This is something that can happen, and it has happened many times throughout history, but you just have to be more patient. And so, hence, like a tortoise, because slow and steady wins the race. As simple as that. We've been outperforming the S&P 500 since launch, and I do believe with this framework, we are going to continue to achieve those great returns over time, okay? So I'm going to be very transparent throughout my journey. I will be sharing my allocations with you, so you're going to see my portfolio performance as time goes on. And so it's going to be nice because we will be able to walk our investing journeys together and hopefully to help each other along the way. Of course, that's the goal. So look, without further ado, I'm going to jump straight into my portfolio and I will lay out exactly what the next videos are going to be about. So stick around and let's build wealth together. Hello, everyone, and here we are. I have my Interactive Brokers account opened up here, so you can see exactly what my allocations are, full transparency. And you can see that overall, I just follow a very concentrated portfolio. So far, I only have 4 companies. You can see that my largest position is Alibaba, which I began buying about a year and a half ago. That was my first position for this portfolio. And it's a company that it is already up huge. And Alibaba is going to be the company that I will be covering in detail in the next YouTube video. So the goal for the next 4 YouTube videos is going to be, I will break down exactly my investment thesis for each of these 4 companies, so you have an understanding of what they are, what they do, how I think they are going to create a lot of value for the portfolio over time, and whether or not this is something that you would like to consider. Please understand that everything I do here is for educational purposes only. This is not financial advice. And so everything that I'm doing is with my own money. I'm not investing any investors' money. Okay? So full disclosure. That said, you can see that overall we've been performing very well. So the portfolio is up 57.11% since launch. And you can see, let me just drag this across. And you can see that there has been a big, I'm comparing my performance with the S&P 500. And you can see that it just shot up while the S&P 500 started collapsing. And this is something that I think will continue with as emerging markets, namely China, continue to outperform. I've been pounding the table on this, guys. The US people, I think many market participants fall into the confirmation bias trap, where they believe just because the US has witnessed tremendous outperformance for the last 16 years, they think that outperformance is going to carry on into the future. I think that's a mistake, especially when we consider the very high valuations in the US markets. So I think emerging markets, which by the way are already outperforming, will continue to outperform over time. Okay, it doesn't mean the United States markets are going to crash, or it doesn't necessarily mean that. But what it means is that when you compare valuations, for example, in China to those of the United States, you can see that they are trading at the lowest valuations ever. Okay, and this even despite in all of this, even despite the massive run up they've witnessed over the last few weeks. So I think it's going to continue. All right, and that's partly why I decided to make Baba. I mean, I'm a full, so I'm a bottom up fundamental driven investor. I don't make decisions based on macro factors. However, that said, I was buying Alibaba, believing the Chinese consumer will at one point start consuming more. Okay, everybody was calling China uninvestable, and to me that was just nonsense because it's the second largest economy in the world. It has many things going for it, and so it makes sense that the country would come out of the ashes, right, and emerge stronger. And that's exactly what we are witnessing. So, and I bought Baba because it was by far, in my opinion, the best company out there. I trusted the financials. I trusted the management team. At the time, I was buying Alibaba close to book value per share, which is ridiculous for a company that was still growing its fundamentals. But I will discuss more Alibaba stock in the next video. Right now, I just want to give you an overview of my portfolio. So we have these four companies. You can see that in full disclosure, I still have a lot of my personal wealth in cash yielding about 5%. I'm based in the UK. So where I have my money is a platform called Wealthify. I don't have any affiliation with them, full disclosure, but what happens is that traditional banks are giving you what, 1% in your savings accounts. I find that disgraceful. And so I just shifted my cash holdings to another provider, risk-free, that is giving me over 4% on my savings, which is very good. And that I keep that cash there until I start seeing more opportunities available in the market, so I can slowly but surely allocate that capital to more productive assets. In this case, is stocks. Stocks are the only investment that I have. Okay, I don't buy real estate. I don't buy cryptocurrencies. I focus on stocks because I believe stocks are going to be, because they have been historically, they have historically been the best outperforming asset class. Okay, and so I stick with companies that are phenomenal. Nothing grows money faster and more sustainably than a great business, and that's what I want to do ahead. So we will keep monitoring this portfolio, and yeah. So the next few videos are going to be about the allocations that I've made. So about the companies that I'm invested in, why I think they will continue to outperform. So I think it's going to be very insightful. But if anything changes, and so if I feel that the story changes for any of these companies, then I will let you know accordingly. Okay. And so, yeah, so this sets the tone for what the next few videos are going to be about. I hope you've enjoyed. Fingers crossed. I'm very excited about this portfolio, and the volatility that we are seeing, especially in US markets, is exciting as well, because that can open up many opportunities for long-term investors like myself. All right. So yeah, I hope you enjoyed the video, guys. It's my first video. Very excited once again to be here, and I'm looking forward to the next video already. So stick around. Let me know in the comments if you found it insightful, and yeah, we'll discuss things further later on. So have a great day.